Hello everyone, I'm Chloe Johnson and welcome to this Fresh Business Thinking webinar series, Lockdown Learning for Businesses, supported by BT. BT Skills for Tomorrow aims to empower businesses and their employees with the digital skills to help grow their business. The Skills for Tomorrow website includes free learning content that small businesses and their employees can access at any time on topics such as promoting your business with online advertising, making sure your customers can find you online, and much more. To find out more, you can click on the link in the comments. Coronavirus is continuing to be a challenge for small businesses and entrepreneurs across the UK. The outbreak leaves an overwhelming uncertainty into the future for business owners, but this is a time when as a business community we need to come together and support one another, and we're lucky enough to work with organisations and individuals who are passionate about supporting entrepreneurs during this time. One of those is haysmacintyre, an award-winning mid-firm of chartered accountants and tax advisors. With 35 partners and over 300 staff, haysmacintyre deliver a range of high-quality accountancy, tax, corporate finance and business advice to scale-up businesses, often fast-growing owner-managed and entrepreneurial businesses, and listed companies across the UK and internationally. Today, Mark, Katharine and Natasha will be providing you with an update on government initiatives available during COVID. So they'll be looking at CBILs, furloughing, R&D tax credit submissions, companies' house filing extensions, and much more. The webinar will be broken into 5 sections focusing on your current business, furloughing, available schemes, funding options, and changing circumstances. Throughout the session, there'll be a handful of polls for you to vote on. Your vote will remain anonymous. At the end of each segment, we'll open up to a Q&A session. So if you do have any questions, you can leave them in the Q&A function at the bottom of your screen. That's all from me for now, and I'll pass over to you, Natasha.
Hello. Oh, I just wanted to check. Can you hear me, Katharine?
Yes, on you go, Tash.
Yes.
That's
okay.
all great now.
Right, sorry. Bit of a tech error there, but all good now. Hi, everybody, and welcome. Thank you for joining us. As Chloe said in her kind introduction, I am a partner at haysmacintyre, so I head up the creative media and tech team there, which is our largest sector. And within that sector, we specialise in working with scale-ups, entrepreneurs, and typically our haysmac client is with us for a journey. We'll be providing them with a range of services, often through scale up to the point of some sort of an event, whether that's a trade sale or an IPO. I am joined today by 2 of my fellow partners, Katharine, who is our head of private client, and Mark Warwood, who is one of our corporate tax partners, international tax partner specialist as well. Thank you to Fresh Business Thinking for welcoming us back. I can't believe that it's been over a month since our first webinar when we presented on the COVID-19 initiatives, and we were talking a lot about what we had seen amongst our clients and in our own business as well, actually. A lot has happened for us, as I'm sure it has for you in those 6 weeks since that webinar. Today we will cover updates on the latest government initiatives, and we hope to hear from you on your experiences. We have the polls again, as Chloe said, so please do join in and answer the questions as we go. It's great to get some real insight on the areas that we're speaking about, and then we can talk about some of the results. It'll be interesting to see how some of those might have changed compared to when we did the poll the first time round. Over the next hour or so, the areas we will cover, as Chloe mentioned, are the latest developments on furloughing, time to pay, funding support available, including the Future Fund. Please do ask questions as we go and share experiences. I've certainly found that one of the most valuable resources during these unknown times is sharing and learning from one another. I've found CEOs, CFOs, founders being honest about their experiences and what their businesses are going through, and that's been one of the best ways to get the most out of the webinars. because I feel that at times like this, everyone genuinely wants to help one another where they can. And we've certainly been spending a lot of our time speaking to our clients as they navigate the challenges that they're facing. When we presented back in April, the furlough claim link had just gone live that week, and it had been reported that in the first 30 minutes, 67,000 claims had been received, and nearly 400,000 companies had sought to make a claim by the end of the week, which is when we were presenting for Freshman's Thinking. That was clearly a sign of things to come, as it has since been reported that more than a quarter of the workforce is now being supported by the £14 billion a month scheme. It's actually a mind-blowing level of government support, but we know that it is coming to an end, and so therefore businesses are left to consider, well, what will that impact be on the levels of unemployment? How will businesses adjust to the new rules? And we'll cover some of what that means for businesses today. Funding has been another hot topic of discussion. We know that the latest British Chambers of Commerce Coronavirus Business Impact Tracker says that 50% of the businesses that they've surveyed had less than a 3-month cash flow in reserve. And when we last presented, 80% of the businesses in the audience responded to say that they had less than 6 months cash runway. So clearly cash is a critical priority in current times. The Treasury has reported that more than £21 billion has been lent through the light touch bounce back loans to the UK's smallest companies. And this scheme hadn't even been announced when we held our webinar just over a month ago. In addition to the bounce back, the government has launched 2 other schemes with state guarantees that with state guarantees that enable banks to lend to companies adversely hit by COVID. So we've got CBILs, so the coronavirus business interruption loan scheme, and its version for the larger businesses. We've had quite a few clients who have applied and not been successful in getting the funding, and we've had some clients that have been successful in applying since we last presented. However, we know from the feedback that the process is slow, the information requests are quite onerous and not entirely clear, which has caused delays in the cash coming in at a time when cash is also very critical in times of the essence. There's been a reported £9 billion that's been lent through CBILs to almost 46,000 businesses, and it's interesting because that compares to 700,000 businesses receiving the bounce back loan. So I think those stats alone are very indicative of the comparable accessibility of the 2 schemes. So there's about 745,000 businesses that have received loans from banks backed by the government. But there is, of course, the concern that these businesses will be unable to repay their debts. And there's been some calls to have an option to convert to equity or to only pay back once the business hits a profit. So lots of questions arising from the current situation that we find ourselves in, but clearly a huge amount of government support. Having set the scene on where we are now, I'm conscious that we've only got an hour, so I want to just jump in with some of the questions. And we'll start with the subject of furlough, just because we know that there have been some recent announcements on the changes. And I'd love to just go to Katharine now. Katharine, we know that it's had a huge uptake, but what do these changes mean? And what can you summarise for us what some of these changes are?
Yeah, absolutely. I mean, huge isn't in it really. So the latest stats at the end of May show that 8.7 million people, so as you say, a huge proportion of the employed population are currently on furlough, or were at the end of May. The total estimated cost is something like 80 billion. So it begins to get to a number where, it's absolutely huge. So the Chancellor had announced previously that the scheme would be extended to the end of October. So really giving employers some comfort and some backup until that time. It was clear, or began to come clear, though, that the scheme couldn't carry on the way it was exactly. A lot of the press coverage has been about weaning employers off of the furlough scheme, so it's been incredibly successful and important. So some of the headlines there really are, over time, employers are going to have to begin to contribute to what to the fund in effect. So that happens over a few months. So it happens between August and October in effect. So for July, I suppose the most important thing is that throughout this whole period, actually, the employee will continue to get the same amount of money. So subject to the rules as they've been from the beginning of the scheme, they will get 80% of their salary, subject to that £2,500 a month cap. Their employer national insurance will be paid, and their pension contributions will be paid under auto-enrolment. In July, that all stays the same. In August, the employer will have to pay the employer's national insurance and the pension. September, they'll pay the national insurance, pension, and then 10% of the furloughed salary. And then in October, really bringing the scheme to an end, the employer will pay the national insurance, the pension, and then 20% of that furloughed salary. So it's really, as I say, a bit of an exercise in weaning all employers off of the furlough scheme. The other thing that will happen is that from July, so from next month now, employers can begin to bring currently furloughed staff back on a part-time basis. So again, it's very much on the basis many people have been furloughed since March, and it's a long time to be away from work. So can an employer begin to bring people back part-time? Where that happens, which I think is a great thing, where that happens, the employer will have to pay for the hours or days or whatever that the employees who work in part time. So again, the employer is beginning to make more of a contribution. So yeah, hopefully lots of change. And in fact, it is a new scheme from the beginning of July. But yeah, the beginning of the end. But we've got quite a few months ahead of us yet.
Mm. Mm. And so it's a new scheme. So what's the critical date at when the old scheme cuts off?
Yeah, so the new scheme is effective from the 1st of July. But I think everybody will be hopefully aware that when you furlough a member of the team, they have to be furloughed for at least 3 weeks at any one time. So if you want to, so from the 1st of July, it won't be possible to furlough anybody who hasn't already been furloughed. So, and because they have to be furloughed for 3 weeks, then you have to have everyone on furlough that you want to put on furlough by the 10th of June. So where are we now? This is the 5th, so we've got 5 days really to make those decisions. And I think this is really to stop, I guess I mentioned the possibility of bringing people back part-time. I think this is to stop, the rest of the workforce who are still working being put on part-time furlough from the beginning of July. So it's just trying to stop or just trying to manage the cash flow on that as well.
Mm. And so it's interesting, isn't it? Because there were calls that, a criticism of the previous scheme was the fact that it was so restrictive in not allowing any work to take place. But obviously that changes now with part-time being allowed.
Yeah, and I think it's I think initially the rule was very much don't allow employees who are furloughed to do any work. I think that was trying to protect the employees, and to make sure that they weren't put on furlough and then expected to work as well. But I think this is a recognition of we need to get people back to work if we possibly can. So this is a sort of a halfway house, to begin to wind down the scheme.
Mm. And how does furlough interact with a company that may be considering redundancies?
Yeah, well, I think there's I mean, that's always been my fear from the beginning, that actually, although the furlough scheme is a great thing, clearly we've got 8.7 million people on furlough, that actually will all of those jobs be there? Keeping it simple, on the 1st of November, will all 8.7 million of those jobs still exist? There's a lot in hospitality of different sectors, obviously, where it's difficult to see that will be the case. So I think there will still be redundancies at the end. For everyone's sake, I hope that's a smaller number as possible. I think the scheme was set up to stop people being made redundant in March, when we all had to sort of head home and stay there. I think what's important is you've got employees on furlough. You have to give them, they've got the same rights as all those staff who haven't been on furlough, so it's important there. And it can't then be that those are on furlough are sort of first in line for redundancy, if that's what you have to do. So you still have to take them into the pools of employees for that purpose. From a tax point of view, there's nothing that says, well, actually at the end of this, if there isn't a job for that employee on the 1st of November, that they can't then be made redundant. So I think, but all the normal rules around redundancy and so forth, redundancy pay, whatever, then kick in at that stage.
I'm just looking at some of the poll results that have come up. So, and I've also got the last poll results. So 70% saying that they furloughed. Actually, that's gone. So we had 85% last time round saying that, but still a high percentage of businesses saying that once the scheme ends, that probably will have to think of alternatives. So, you know, your fear that you've said, you know, has this just delayed tough decisions? You know, that was a similar level of percentage last time. We had 45% saying yes, we're going to have to do something else. Which is in line with what we're hearing today.
Yeah, absolutely. And I think that the numbers are interesting, and I think that number of people on furlough has grown, interestingly, has grown nationally over the last few weeks. So it's interesting to see those stats. Yeah,
absolutely. I'm just going to check to see, we've got a couple of questions coming in. Right, so there's an individual that's got a startup company and who hasn't been paying himself, but was going to start drawing a salary from April, but is now starting from June. His question, or her question is, can she furlough herself from the 1st of June? Is this acceptable? And if so, how do I go about claiming?
Yeah, so this is where what is in principle a very simple scheme gets complex. So the key thing is, as an owner, manager, the shareholder, director of the company, yes, you can furlough yourself if that makes any sense, as long as you're not doing any work for the company. The key thing is, though, that if you haven't drawn a salary before and you weren't actually on the payroll on the 19th of March this year, then unfortunately you won't qualify. So the rules are very, very, very strict on that point. So if the first time you were going to take a salary was to be April this year, then I'm afraid you probably won't qualify for the furlough scheme.
And there's another question that's come in related again. So if a business has said that they will top up salary, and they have since been doing that, for staff that are on furlough, do they have to do that all the way through to October?
No, so there's no obligation to top up above the 80% of the 2,500 that I mentioned, and so you don't know. It's great if you've been able to top up employee salary, that's absolutely great, but you're under no obligation in terms of the scheme rules to actually do that. What is important, though, is that actually furloughing somebody in the first place is a change of their employment conditions. So you will have told them what you were going to do. So if you then plan to change, and if you've been topping up by, I don't know, £1,000 a month or whatever that number is, if you plan to stop doing that, then you're going to have to agree that with each employee again and go around that process and put it in writing to them and so forth as well. But there's no obligation under the scheme to continue to do so.
And then there's another question on, so if there's a flexible arrangement for a member that's on furlough and they want to bring them back, do they need another flexible arrangement if they're going to come back on the flexible furlough scheme? So I guess for an individual that is already on furlough, what's the process to then getting them onto the new scheme, I think is probably what this question's getting at.
Yeah, no, absolutely. Really, really good question, actually. Really good question. So in effect, the key thing is that anybody you're going to want to furlough between the end of June and the end of October must be furloughed between now and then. So by the very latest, the first time they should be furloughed is the 10th of June. Where people are then, so subject to that condition, people are then furloughed after that date, so from the 1st of July. And you know, it's a continuing, or perhaps you're swapping them back round again if you've been moving the team round somewhat. And actually, you've got that continuing obligation to agree with them that they're on furlough until whatever that next date is, for example. In terms of making the claims, that will remain the same. So through the online portal, so in effect, that part of the process won't change. It's just important. So while I'm saying it's a different scheme, the process will be the same. It's just important to make sure that all employees comply with the conditions to make sure that they can be a qualifying employee for this purpose.
Yeah, it's interesting you mentioned about rotation of team members, but those replying on the poll, no one's actually done that, which is quite interesting because we've seen a bit of that amongst our client base, haven't we?
Absolutely, absolutely.
Hmm.
Yeah, and I think we've seen clients do it on the basis that it's just making sure that, you know, particularly if we think, well, there's very limited opportunity for people to come back to work, certainly full time immediately, that actually, can we have an employee furloughed for 3 weeks and then maybe swap them out with somebody else? You know, so, and obviously the 20% differential in salary is important. I'm not saying it's not, but actually more importantly, kind of keeping in touch with work and colleagues and whatever, if that's possible. So it makes the furlough calculations and for our payroll team more complex,
complicated,
but you know, it is a good way of just sort of trying to keep people in touch. So if there was anybody on the webinar who wanted to do that, actually, then they would need to furlough and do that by the 10th of June. Again, that's the important date to do that.
Yeah. Thank you. So I think that was, I'm just going to have a quick look again at the questions. I think that was all on the furloughing. That's all our questions. Thank you for that, Katharine. I thought maybe now we could just move our focus slightly to time to pay. So I know that's been another area that we've been helping clients, you know, negotiate and, you know, in the process and what they need to do to get some of these payment plans in place. I wondered if you could just give a bit of an overview on what we've been seeing, what the process is like, how quickly HMRC are responding, are they receptive?
Yeah, no problem. Thanks, Tash. Absolutely. They think the key thing, this has been evolving over the last few weeks as well, while both we obviously taxpayers and HMRC are sort of learning from the experience. So I think it's important to note there are some statutory deferral agreements in place. So in terms of the self-assessment payment on account that's due at the end of next month, end of July, then that can be deferred, not paid until the end of January next year, and there's no interest to pay on that, and there's no penalty for doing so. Likewise, we're marching on through June now, and we mentioned on the last webinar there's an automatic deferral of VAT payments, and no VAT was going to be paid between the 20th of March and the 30th of June. That VAT needs to be paid by the end of March next year. So again, they were automatic deferrals, if you like. There's no equivalent of those automatic deferrals for PAYE, for example. So we're seeing a lot of time to pay arrangements being agreed with HMRC in terms of PAYE in particular. And for that, HMRC set up a dedicated helpline. It's a pain and it takes time to get through to them to set this up, but to pick up the phone and to agree that. You can also agree time to pay corporation tax, and any other taxes as well. I think the key thing there is really be ready for your call when you're making that call. Have all your tax returns, so including your VAT returns, your PAYE, your payroll submitted on time every month, all those sorts of things. Be a good tax citizen, and HMRC are far more likely to listen to your request for time to pay. What we're seeing is that over time, in those first few days and weeks, HMRC didn't ask for too much information in terms of agreeing that the time to pay agreements. We're finding now they're asking for more, I have to admit. So, having a think about those cash flow forecasts, and being able to demonstrate that you will be actually able to pay the pay-wise. That's what you're looking trying to pay in future and those sorts of things. So I think it's just do your homework as you would, be prepared for the call with HMRC as you would for any business call. I think is the best advice.
And have we been seeing many of our clients taking HMRC up on this time to pay? Or because it's interesting, because looking at the polls, 25% have been successful, 63% haven't applied.
Yeah, I think because of the automatic VAT deferral, I think that's given quite a lot of our clients sort of room to some space to to deal with that. For those who've got any sort of chunky self-assessment income tax payments to make, again, they know they're not going to have to pay that for a few months necessarily. So we have seen, and typically it's been around PAYEs, I say, again, just having that having that time to pay. One thing actually I hadn't mentioned before is that when you are making a job retention furlough scheme claim, it is important that you use that money for the purposes intended. That sounds like a really strange thing to say, but when I'm talking about time to pay, PAYE, that's what it's intended to do. It's intended to pay your employees and to pay your PAYE. So actually, businesses that have got a lot of staff furloughed won't then get that time to pay arrangement at the same time, if that makes any sense.
No, it does. Yeah, absolutely. And what are there other considerations, like is there interest that would be applied on late payments or those sorts of considerations?
Yeah, so on the statutory deferral, so of income tax and VAT, there's no interest. So that's an absolute change, new law, new bit of legislation. But where you are simply agreeing a time to pay with HMRC, then interest will continue to run. So if you agree, well, I'm not going to pay my PAYE for 3 months, then interest will run. Now, obviously, those interest rates are very low, and possibly lower than you could borrow that money elsewhere. So it's still a good deal, but don't forget the interest will have to be paid. Yeah.
And we're seeing, so the results are, between 1 to 3 months. People have been negotiating in 3 to 6 months. Is that in line with what we've seen our clients sort of?
Very much so. I think it's traditionally HMRC may have said, oh well, we can agree over the next 12 months, what you can pay. I think what they're trying to do is just, if you agree 3 months, stick to the 3 months. If you find when you're beginning sort of that process or partway through that process that you're not able to pick up the phone and speak to them again, don't default on that arrangement because you won't get another one. And I think they're encouraging taxpayers to come back, businesses to come back and then have another conversation if they need that more time, rather than letting it stretch out over 12 months. So they're trying to enforce a bit more sort of discipline on the arrangement as well, I think.
Yeah, okay, that's great, thank you. I thought maybe now it would just be good, I'm just conscious there's been quite a few other developments, sort of income tax related, like that have been brought in since our last webinar, for example, to do with purchase of office equipment, employee benefits, and claiming for statutory sick pay. And I just wondered whether we cover some of those off, perhaps starting with applying for the statutory sick pay online, and that recently being launched, that claim, ability to claim.
Yeah, I mean, I think I've been very positively stunned by how quickly HMRC has been able to put some new online systems in place. So if there's a positive out of the current situation, then I would say well done to HMRC on that. The numbers of people using these systems is incredible, and touching some wood, so far so good. They've kind of held up very robustly as well. And one of us, as you say, I'm just looking for the date on my note. Yeah, so the new online statutory sick pay service launched on the 26th of May, so just a few days ago. and very much looking to speed up that whole process. And that seems to be working well. Payments are now being made, I think, within as little as 6 working days. That seems to be the core around a lot of these systems. And again, it's about having all your paperwork set next to you before you make that claim. You will need your government gateway account. You will need your PAYE online account. You will need to have the numbers of employees and the real detail next to you when you make those claims too. But so far so good. That seems to be working well. You're on mute, Tash. Sorry.
Oh, again, this is such a schoolgirl error, isn't it? I've done so many of these, and still. I think we've all been kind of really impressed with how quick the portals have been, like even to make the claim for the CJRS quite easy to navigate and quick to make a claim. So it's good.
Absolutely.
How about the it's only small, I know, but the exemption for the purchase of office equipment for those working at home?
Yeah, I think it's a really important one. Typically when an employer is paying for anything for an employee, if there's a if that piece of equipment, so it's a desk, for example, or it's a second screen or whatever it happens to be, if there's a possibility that has a duality of purpose, so not just for business use, then the rule is always that it's a taxable benefit, with very few exceptions there. So we've got a temporary relaxation of those rules, and I know we've got a really young chap in my team who relatively recently I discovered was working at home, sat propped up with a pillow against his wall, sort of thing. I thought, so well, let's make sure we get him some sensible equipment.
Yeah.
And so that exemption from tax will last for the whole of this current tax year. So I think that's really helpful. And a lot of that equipment isn't expensive either, but it just means that it just makes it obvious that people are actually sat at a desk or chair that doesn't hurt their back or whatever it is that they happen to need.
Yeah.
So I think that's really helpful.
Just before we go on to the next question, just looking at the poll results, so 50% of our audience think that the government hasn't gone far enough in supporting businesses, and I just wondered if anyone would be willing to give a bit of detail or information or share their views on how else they think the government could have supported and what else they should be doing. So if you're willing to kind of break away from the crowd and share those views with us, please do. We'd love to hear how else you think the government could have helped. And in the meantime, what about those individuals, like there's some directors that might be thinking, oh, actually I'll waive some of my salary, I'll forego some of my dividends. How do they go about doing that, Katharine?
Yeah, as ever, tax is complex, and it is important when doing something that is you're doing that, perhaps waiving some salary, you're sort of redistributing salary to other people, you're waiving a dividend or whatever it happens to be. It's important that you do it in the right order. You perhaps seek some advice to make sure you're getting it right. Key things there are to waive salary, dividends before you're actually entitled to it. So, for example, if I was to be paid £1,000 a month, and then I decided, after the payroll had been run, while I was, entitled to that salary, oh well, actually, I'll do what isn't a great thing, and then I won't take that salary this month. It would still be taxable on me, even if I didn't receive that money. So what's important is actually either as a shareholder director, and the same applies for dividends, is obviously either don't declare them at all if you have the power over that, or actually where dividends have to be or are being declared because of external shareholders and whatever, is making sure that you waive that right and formally waive that right before the dividends are actually declared. So it's not waiting and thinking, oh, actually I should have done something about that. It's planning in advance. That's the key thing. What other people are doing is perhaps they are taking their salary or a large chunk of it and donating it to charity. So obviously, particular charities as well. So that, you know, that's sort of a very cost-effective and tax-effective way of doing that as well. But yeah, anybody got any questions about what their own plans are, very happy to talk to them about that as well.
Great, thank you. We've had a few questions come through. What support is available for, and actually it was going to be one of my next questions, in any event for self-employed individuals?
Yeah, so the self-employed have sort of have always come a little bit behind employees with the Chancellor, and there's been a lot of noise, a lot of discussion about this. So we have something called the self-employed, it's an equivalent for a scheme for the self-employed. And again, sort of breaking that down effectively into two different schemes. So there has already been a grant, the first grant under the scheme. So just get my dates right. So that was for the period from March to May, and that was paid in May. Again, similar numbers: 80% of taxable salary, that £2,500 limit, but limited for those whose taxable profits as self-employed were £50,000 or less. So the maximum that people would have got in that May payout was £7,500. And again, online system for that, people could log on and make those claims, and that seemed to work very well. The payments were made very, very quickly. That £50,000 is a cliff edge. So, you know, it's unfortunate somebody, to make the point, earned 50,000 or an average of £50,001. They don't get anything, but if they earn 49,999, then they'd be entitled to most of that amount. It's the way it's set up. We have had an extension to that as well. So just last week, the Chancellor announced there will be a second grant under the scheme. So rather than 80% this time, it will be 70% of taxable profits, which means that the maximum claim for which will be paid in August, for June, July and August, will be 6,570. So again, you see that it's a slightly different mechanism, but the Chancellor's trying to wean us off this scheme as well. All based on the tax return submitted, and very much an automated system from HMRC that you need to log in online and make those claims as well.
Yeah. Okay, thank you for that. You're very much the direction of travel, isn't it? Right, the funding, the support is coming to an end and weaning us off it. So it will be an interesting few months, I think, as businesses adjust to that realisation.
Yeah, I think that's right.
I know we're going back on some topics, but there's been a couple more questions on furloughing. So if that's okay, we'll just hop back to those. They've just come through. This is not a silly question. They've said it might be a silly question, but it definitely isn't. There's no such thing as a silly question. Never. In my view. But what if someone gets sick when they're on furlough? What would they get paid in that?
It's a really, really good question. So if they are sick, then they're entitled to statutory sick pay. So when they're on furlough, so it is important that you are keeping in touch with employees on furlough, that they tell you when they aren't well, so that that's their entitlement rather than the furlough claim. So just to add to the payroll complexity there as well. It is quite a strange rule, or has a strange effect, because it does encourage people not to say that they're sick, I think. You know, in those rules, but that's the way that it should be working.
Okay. And then a slightly, I guess, related question is, if they're not sick but they're self-isolating because of government advice, what should they be paid in that instance?
Yeah, so the rules on that self-isolation, whether that's for your own health or family members or whatever, are the same, that people are entitled to statutory sick pay in those circumstances. I mean, the rates were increased when we went down, or just as we went into lockdown, but without any doubt, you know, those rates are not as high as either salaries or indeed the furlough salary rates for many.
Yeah. Okay, thank you very much. That's really helpful. So I think then we've covered a lot of detail on furloughing and some of the time to pay and also support that's available to self-employed. Another area that we will just, because I'm conscious of time going by and I do want to ensure that we cover it, is funding. So we know that the future fund was announced actually when we did our last presentation, but it hadn't been launched, and it has since been launched. So I was going to ask Mark, who's one of our tax partners, who hasn't been able to log on to Zoom but is on my phone, so that is how he's going to speak to us all today, is via my phone on loudspeaker. Is whether, Mark, would you mind just giving us an overview of what is the Future Fund?
It's obviously a way of funding all types of businesses, and the way of structure is by way of a convertible loans to UK-based companies, and the amount of loan ranges from 125,000 to £5 million. And how that works is the government will provide that funding as long as the same amount of funding is matched by private investors. The company cannot choose to repay that loan. Instead, repayment is on set terms, the main one being maturity, which is after 3 years, or certain events happen, the most common, either raising further equity funds, or there's an exit event, that loan gets converted at the minimum discount rate of 20%. As you mentioned, it was launched, I think a week ago, Monday past. It's all applied for online. In a way, two parties are involved. You need first a lead investor, who may be just one person or a person representing themselves and a body of other investors. They deal with the application process first, and then you also have the investee company who also deals with the application. I think according to the guidance, it's a first come, first service on this, and from application, roughly the funds are received in a minimum of 21 days according to the guidance. So they're being opened a week last Monday. I imagine no one has received any funds yet, but I understand there's been a few applications that have been approved.
And there's a question that's come in, Mark, saying, can you apply for the Future Fund if you've had other forms of COVID funding?
Yes, you certainly can. You're not barred whatsoever. There is no eligibility criteria or disqualification if you have other types of funding. So, get the bounce back loan, then the CBILs, you can also get future funding as well. I think what I should touch on quickly on the eligibility criteria. All types of companies, as long as they're UK and they're incorporated by end of December 2019, qualify. Any kind of size. One usual restriction is that in the previous 5 years, ending I think on 19th of April 2020, you must have raised share capital from third parties of at least £250,000. Bit of an odd requirement now. We've had 2 or 3 companies that would otherwise qualify, but they haven't met that test because they sought funding via other convertible loans. But convertible loans aren't share capital, so they don't qualify.
So I'm just looking at the poll results, Mark, and I'll be interested to hear your view on this as well, based on speaking to our clients. But we have asked, does the Future Fund seem like an attractive option, and will you be applying? So 18% have said yes, 45% maybe. Which is slightly up on when we did the first poll actually, back in April, where it was like 14 said that they thought they would be applying. How does that compare to what you've been seeing and hearing from clients in terms of whether they will apply?
Yeah, I think if you look, people saying a definite yes, 1 in 5, that is actually within the range of my feeling or views back from other clients or investors.
Yeah.
I think a big issue of this, and we discussed it last time it first came out, is the fact the future fund doesn't qualify for EIS.
No.
And therefore that carves out huge amounts of potential investors. I think other issues are a bit complicated. It's also some might consider expensive, especially the repayment premium, which is 100%. So that'd be quite high, but according to the government, that's in line with venture capitalists. They sought advice on this point, and that's what the VCs or private equity world was telling them. And I think that's about right on other deals I've seen. But yeah, I think it's not everyone's rushing to it, far from it. I think it's got to be the right type of company with the right type of investor base.
And what do you think that right type of company and investor base looks like?
Yeah, I think the one going through who has an overseas US-based investor, they need further funding for further development. So there is a very attractive option. US investor cleared and qualified for EIS, already invested on a Series A and a kind of 2 times multiple return. So they're happy with the terms of the convertible loan agreement. So there, an overseas investor can then get further money from the government on terms which they're happy with. I think it's the same with probably other companies being backed by family offices, or certainly investors that don't really care about EIS.
Yeah. And are there any business, so for a company that has raised EIS or SEIS in the past, is there anything they need to be aware of if they're applying for the future fund in terms of protecting the EIS status of those investors, or is it just completely separate and there's no further considerations?
Yeah, when it was first announced there was EIS and SEIS concerns on past investments, the government have confirmed that all past EIS, SEIS investments will be protected. Whether that needs a change of law, that might have to come through, but they've certainly confirmed that point. So everything historically is fine. It would be undisturbed. It's just unfortunate the future fund investment itself doesn't qualify.
Okay, thank you. I'm just going to check. I don't think we've had any further questions in on this. So I just wanted to move on then from the future funds to other things that we've been seeing from a corporate tax perspective, Mark. So I wondered whether you could just say a little bit on R&D. So we know that there's a lot of innovation happening, and we've got a lot of clients that are making R&D tax credit claims. What we've seen some companies shortening year ends to get an extra claim in. How quickly are HMRC processing claims at the moment?
Usual standard practice, actually, in a way, COVID hasn't caused any disruption to that process, which from experience is usually 4 to 6 weeks, and probably more closer to the 4 than the 6, to be honest.
Yeah, okay.
And in terms, yes, people have been shortening their accounting periods. I would say people who already had their accounting periods lapsed have been working a lot harder and getting their compliance done to submit their R&D claims as well. I haven't necessarily seen any, companies that haven't submitted an R&D claim before now looking into it. And maybe that's the next area to explore, because R&D covers your whole aspect of your operations, not just about your new product or your new service, but also your back office functions that you're really trying to improve efficiencies.
Yeah, so you're saying actually it's got quite a broad application, so perhaps have a think about whether any of your activities would qualify. I think the other area that we've been seeing having some interesting discussions on are option schemes, aren't they? And some companies, some companies may be valued less now because of the impact of COVID on their business, and therefore taking advantage of maybe getting a lower valuation agreed with HMRC for EMI. Are you seeing a bit of that?
Not overly. I think companies will be driven to doing share option schemes because they want to appropriately remunerate and motivate their employees. Maybe because of COVID, there has to be pay cuts or people working part-time. Share options will rise up as being a non-cash alternative to motivate the employees. So that, I think it's probably a bubbling topic. Maybe there's ballroom discussions at the moment. In terms of time the revenue take on the valuations and the approach they're taking, I'm not seeing really any change. They're pretty quick on their valuations anyway. I submitted one on the 20th of May and I've already received it back with positive news. I also know they take into account the disruption COVID has caused, and they're now given a valuation period is now extended to 120 days. It was 90 days. So what that means is, unless there's been any significant changes in share capital, share issues, share transfers, that valuation will now hold for 120 days, allowing you real breathing space to issue options to people.
And would you say that you've seen, where companies perhaps were profit making before and are loss making this year, is there a benefit in getting your tax return done early for loss carried back relief, or what's your view on that?
I think because of the timing of COVID, we always ponder when it actually arrived in the UK, but really everything was from 1st of April. Most companies have their accounting either December or March. So the accounting period in question is already passed and not affected by COVID. So in a way, no, not really. And the next one, if you're a June year end, well, it's only 3 months of potential losses there.
Yeah, so it's a bit too, but it came a bit too late to make an impact on the financial periods that people were working on.
Yeah, I know a few clients where it is a March year end, they were impacted by it. So we're talking about the new accounting period. They have definitely reduced their quarterly payments and accounts. If you're a quarterly payer, you should definitely be revisiting that and substantially reducing your quarterly payments.
Yeah. Okay. Thank you, Mark. I'm just checking if there's any questions in. No, not yet. I just wondered now whether you could just tell us a bit about the code of practice that the government is planning to publish with the commercial sector and what they're trying to achieve.
It's on
rent. And
rent. So I don't know too much about that, but obviously there's been difficulties between landlords and tenants, and so the government, they haven't published that much, just an announcement that we're going to look at this code of practice or getting those parties to speak with each other. However, from our own experience, Tash, we know in majority of cases landlords are being amenable.
They are, yeah.
The key is tenants being communicated, isn't it?
Yeah.
And transparent of the position.
Yeah, so we have quite a lot of clients in the hospitality sector and also retailers, and we've sort of said consistently, and they've also recognized that the best way is not to run for the hills, is to be having open and frank conversations with landlords, with creditors, with debt providers, because you need to bring people with you through this difficult time, through the journey, and they are receptive to helping. So in a lot of clients' cases, they've been able to negotiate rent deferral and rent-free periods, actually, which has been quite encouraging. I just also wondered, Mark, whether it's worth just mentioning about the changes in, the directors are at risk of acting unlawfully, and the changes that the government are bringing in to reduce that risk for directors, given it's such uncertain times.
Yeah. Where that is, there's that wonderful trading law, isn't there, where trading insolvently, they now have a temporary measure whereby directors will not be penalised for that, where they're trying to turn their business around during the COVID-19 phase. As always, if anyone's concerned, they should all be looking when they are trading insolvently. If they do have those concerns, it is to speak to a solvency practitioner. Despite these changes, it's always good to speak to such experts.
Yeah. Okay, and we've had a couple of questions come in for you. So there's a company that's about to raise an investment via SEIS, and they're near their 2-year trading limit. Do you think HMRC will be more lenient on that trading time limit in light of COVID?
I've had no indication from HMRC of any relaxation on EIS or SEIS rules.
Mm.
No.
Yeah, okay.
They really are stringent on those kind of rules. So do not rely on revenue relaxing whatsoever there.
And if a company falls outside of that, then obviously it's then looking down the EIS route, I guess, yeah? And then I've got another one on R&D. Does a business need to be concerned when claiming R&D if they're also claiming other COVID state aids such as CBILs? Will this impact the R&D claim?
Yeah, it's a good question, that one. Yeah, R&D is subject. No, I don't think so, because R&D is a registered or notified state aid. I'd have to check the rules on that one. I think it's notified state aid.
Okay. For the individual that asked us that question, then I don't know whether Fresh Business Thinking, Chloe, whether you could share our details with them, and then we'd be happy to pick that up offline, having looked into it. I'm conscious that we're running out of time, but I did just want to close on a last point, which is that we have got a huge amount of debt now, and there are lots of government borrowing, and they reportedly standing at wartime proportions, and there is a big question of, well, how are we all going to pay for this? There's an emergency budget that's tipped for 6th of July. Katharine, what do you think we can expect to hear from the budget, or is it too early to say?
Yeah, I think it'd be really interesting, and I think be interesting to see whether the budget happens that week. This emergency budget happens that week. I think, as you say, we've got a huge deficit we're going to have to fill. Question is how quickly the Chancellor decides that we need to try and raise taxes to try and fill some of that deficit. But a balancing act, I guess, with making sure that we're keeping the economy going, that he's trying to kickstart whatever he can. Obviously, I'll be worried about the stock market, worried about property prices and all those things. We do, I suppose, some of the things we do know, or at least I think we know. The Prime Minister last week promised again that they wouldn't go back on the manifesto promises on raising the rates of income tax, VAT or national insurance, and that they wouldn't change or wouldn't backtrack on the triple lock for pensions either. So both of those kind of sets of triple locks, if you like, are quite expensive to maintain. The fact that he said it, let's see. It does then raise the possibility of, okay, we're not changing the rates of any of those taxes. Does it mean a focus on more capital taxes, property taxes, mansion tax perhaps, capital gains taxes at a sort of an all-time low? Is it possible that those rates will increase? Not that it'll make a huge difference in the numbers, but sort of taking away a release for inheritance tax and all those types of things. In short, that's a long answer, Tash, sorry, but in short, who knows? And I'm glad I'm not the Chancellor and having to make those decisions. But I do think there's a real balancing act he had to perform, whether that's 6th of July or later in the year, whenever he has his the next budget. But and how quickly we're going to recoup some of the losses that we've suffered.
Indeed. So our tax team will be working hard, won't they, analysing all the announcements as they are. So watch this space as they come out. We'll be releasing lots of content on it. I'm conscious that our hour has whizzed by with some brilliant questions from the audience. So I just end to say thank you so much for joining us. I really do hope that you have found it an insightful session, and thanks to Great Business Thinking for hosting us once again. And that's it. Thank you.
Bye.
Bye.
Mark, Natasha and Katharine, thank you so much for joining us on this webinar. I'm sure our audience would agree that was a great session. I have included Natasha, Mark and Katharine's LinkedIn profiles in the comments. So if you do have any questions after this session, I'm sure they'll be more than happy to answer them over there. Our next webinar in the Lockdown Learning for Business series takes place on Monday, the 8th of June at 2 p.m. with Alan Barrett, founder of Grenade, as he shares insight into the transition from startup to global brand and how they as a company have continued business as usual by adopting remote working and the strong focus on digital and e-commerce. If there is anything you'd like to catch up on from today's session, we'll be sending out a replay of the webinar coming shortly. You can find the replay and all future webinars at www.freshbusinessthinking.haysummit.com or by clicking on the link in the comments. Thank you very much for joining us today, and thank you again, Mark, Natasha and Katharine.
Thank you.
Goodbye.